Party City might not be around for much longer. In December of 2024, the company announced that it would be filing for bankruptcy again, but this time winding down operations by closing all of its stores. Yeah, unless something major happens, like a buyer swooping in to rescue the business, this is really looking like the end of the line. The current plan is to hold going out of business sales to liquidate all the existing merchandise, and over the next few months, shut everything down. Party City is the biggest store of its kind, with about 800 locations spread across the United States, easily qualifying this as a major retail bankruptcy. I have seen a lot of comments requesting that I make this video, and I am happy to do it because Party City has been an eventful story. Actually, I already made a video about Party City back in 2018, and this is the perfect opportunity to follow up on it because things have gone very bad from that point. 2018 was arguably the biggest year for the company. They reported their highest sales ever of $2.4 billion, while operating more stores than ever. It's kinda sad because in the 1990s, the founder of Party City, Steve Mandel, said that he wanted the company to ultimately grow to 1,000 locations, and after coming so close, it is now looking like that may never happen. Party City has recorded multiple goodwill impairment charges since 2018, totaling over $1.5 billion, essentially recognizing that it has lost most of its value. I mean, the stock price was already falling in 2018, but it got much worse from there, dropping down to practically nothing by the end of 2022. Then, at the start of 2023, they filed for bankruptcy, reportedly reducing their $1.7 billion in debt by about $1 billion, which sadly was not enough to recover the situation. They continued closing stores, laying off employees, and struggling to make payments. So here, we are almost 2 years later, and things are looking worse than ever. So in this video, I want to talk about what has been going on with Party City, while identifying what I believe to be 5 of the biggest reasons behind its decline. Starting off with some various external factors. I'm lumping all of these together because most of the issues with Party City stem from within the company, but I do want to recognize that there have been some factors beyond their control that I believe have complicated things enough to justify being on the list. Maybe the most obvious one being the pandemic. In 2020, Party City reported their lowest sales figure since a decade earlier because clearly people were having fewer parties during that time, and that is bad news for a party supply store. That's all pretty straightforward. Inflation has been another factor. Well, not the literal inflation of the party balloons, but, you know, prices going up. In September of 2024, the newly appointed CEO said consumers continue to feel pressure on their budgets in an environment of uncertainty, sometimes making joyous occasions feel stressful due to affordability, which I would say is understandable. Another external factor that you might not think about has been helium shortages. So here, I actually am talking about the literal inflation of the balloons. This very thing has been mentioned on their annual reports as a risk factor going back to 2015, because those balloons account for something like 4% of their sales each year. So these have all been things pushing against the company that I would say have combined to make a bad situation even worse. Going back to the list, another major reason behind the decline of Party City has been inventory reports. Now, I'll admit I'm going way back with this one, but when looking at the company in its entirety, this was arguably the biggest event before those bankruptcies and set things along a very different path. In the 1990s, Party City had been expanding like crazy, starting the decade with 11 locations and ending it with almost 400, which proved to be too much to handle. In 1996, Party City had an initial public stock offering, raising over $15 million to further expand things. Once it was a public company, investors needed to be kept up to date about things, so legally it needed to file reports in a timely manner. Well, they were not tracking their inventory properly, which led to a delay in their reports, which led to the trading of the stock being suspended, problems with creditors, changes in equity, and ultimately, the founder, chairman, and CEO Steve Mandel left his positions. A new leader was then brought in who redesigned the stores, among other things, so almost everything that happened with Party City since the 1990s almost certainly would have been different had they been able to track that inventory more efficiently. And you will see the scope of this a little better as I go through the remaining reasons on my list, the next one being competition. Party City started in 1986 when all of these category killers, as they are called, were emerging. The trend at the time was to find a category of retail and make a big store centered around it that used economies of scale to offer the customer lower prices and a wider selection. Some examples of this would be Best Buy for electronics or Toys R Us for toys. I think that Steve Mandel recognized that there were not any of these stores when it came to party supplies. The only real competition was smaller local stores, or maybe half an aisle at the Walmart. And he was right. The public responded to the prices and selection at Party City, which were typically more attractive than anywhere else, and that is why they were able to grow so aggressively. And even though there still are not any comparable national chains when it comes to party supplies, the market has become much more competitive. The discount stores like Walmart have expanded their selection over the years, drugstores like Walgreens offer a lot more than they used to, and obviously online retailers have been taking away market share. These have all been issues for many other category killers in their own respective markets as well. But the most concerning competitor has probably been Spirit Halloween, given that Halloween has typically been Party City's busiest time of the year, accounting for something like 20% of all sales. To this day, I'll admit that whenever I hear the name of the store, I instantly start humming the song Thriller because of that one commercial from many years ago. In fact, I released that video in 2018 on Halloween because I felt that it would be a fitting date. They even started kind of a spin-off store called Halloween City that used to open hundreds of locations every year that has not been doing well. Today, Spirit really seems to be the new go-to destination for Halloween. 1,500 of them pop up each year, making them twice as common as Party City during that time, and in my experience anyway, those Spirit Halloween stores tend to be more fun and offer a better selection. Let me know if you agree with that, but they have been so successful that they are even experimenting with Christmas stores. So I don't know, given the way things have been going, I feel like Spirit might be on track to be the new Party City. What I'm trying to say here is maybe somebody does have more party for less. The next reason on my list behind the decline of Party City is a new owner. I'll admit that it gets a little tricky here, but in 2005, Party City was bought by AAH Holdings, a company owned by two different private equity firms. They paid $360 million for it, which was a 42% premium over the stock price. Likely a big reason that they were willing to pay so much for it is because they were already the owners of a party supply manufacturer, so there was potential there for vertical integration. So shortly after the deal, Party City and that supplier made a deal where they would start supplying about 80% of their merchandise. And that could be seen as a very good thing financially, because owning both the retailer and the company that supplies the retailer can be a huge money saver. But founder Steve Mandel says that he believes that this deal restricted Party City as far as the variety of items that they can sell. They're buying most of their stuff from one supplier. So I think that shows how Steve Mandel would have run things differently had he remained in charge of the company, and potentially how this new owner is indirectly responsible for letting the competition catch up. My final reason behind the decline of the company, honestly, might be the most impactful one on the list and the one I'm going to talk about the most: a new owner. Yeah, again, I have it on the list twice, which right there suggests potential instability and lack of a consistent vision. Having new owners and leaders coming through makes it difficult to follow through with long-term plans, but there are multiple aspects to this. The reason that any company files for bankruptcy is because they cannot keep up with their debts. So I think you'll agree that a logical place to look for clues would be a graph displaying how much debt they have had each year. And when I do that, it really looks like something happened around 2012 and 2013, given that it just about doubled to an all-time high during those years. Well, it turns out that the majority of Party City was bought by another private equity firm in 2012 in a $2.7 billion deal that was mostly leveraged, meaning the big jump in the graph can mostly be attributed to this acquisition. And to take it even a step further, the following year, Party City added over $300 million in debt to pay a dividend that went to the company's owners. Now, in 2015, I do want to point out that they had another public stock offering that was used mostly to bring that debt back down some, but clearly it was still too high. Since that acquisition in 2012, Party City has averaged over $100 million per year in interest expense, making it difficult to do, well, anything financially. The bankruptcy filing said that they had between 10,000 and 20 55,000 creditors that they simply cannot afford to pay. The current CEO said that the company has done everything possible that we could to try to avoid this outcome, and I'm sure that is true in the short term. They have done everything they can to try to climb out of this hole, but the real issue was probably digging that hole in the first place. You know, it is crazy to think about how different this video is ending compared to my video from 6 years ago, so you can never tell how things are going to go. Maybe Party City is somehow going to find a way to recover, and I'll have to make part 3 in the series in the year, I guess, 2030. That is not necessarily my prediction, but tell me if you think otherwise. And also, let me know in the comments, what do you think about Party City? Are you sorry to see it go? Are you going to miss that Candy City section that would sell individual candy pieces? That was always my favorite part. Or do you think that it is easily replaceable? The numbers suggest that many of us have already started going to Spirit Halloween or the internet or wherever else in place of Party City. Oh, and if you are one of the 16,000 employees of the company, you are among the most affected by it, so I'm curious to hear any thoughts you have about this situation. As always, I want to make it clear that this is not a complete list of everything contributing to their downfall. It is only the reasons that I believe to be the most significant and the most interesting. Tell me if you think that something should be added or subtracted from it. And any other thoughts you have about Party City or anything else in this video, leave them in the comments. I'd like to hear what you have to say. Merry Christmas, and thank you for watching.